At now, this is the biggest artificial intelligence initiative globally, and we think it is severely underestimated. We still have a ways to go, but we are ready for a significant shift in customer preferences towards better products. The target price is $27. Because it passes cost savings on to its consumers, Tesla is bringing down the price of electric automobiles, making them more accessible. Greetings, fellow financial enthusiasts. I want to ask you a question. Thankfully, there might be a close solution. We're going to share a secret with investors all over the world today. Are you prepared to discover the ideal time to buy Tesla stock and possibly make millions of dollars? We finally get to explore Cathie Wood's most recent revelation after a long wait. We'll go over the subtleties of Tesla's stock, the factors that could drive its potential rise, and why this could be an opportunity to invest in stocks once in a lifetime. Keep an eye out for our upcoming revelation of this groundbreaking knowledge that could completely change the course of your investing career. This stock analysis is not just another one, it holds the key to unlocking a plethora of potential chances. Here in the headlines, where Tesla's stock, opportunity, and fortune mix get ready for an exciting financial journey. To receive notifications, don't forget to ring the bell and check the subscribe button. The path to millions now begins amid a backdrop of challenges this week affecting many organizations. Tesla is a notable exception. We concentrate on Tesla's unique position in the market, a topic that has garnered a lot of interest. Let's look at the dynamics of Tesla. There is an intriguing discrepancy between Tesla's market price and the company known for its cutting-edge electric vehicles. The figures are remarkable, particularly in light of other industry players. Recent data shows a significant increase, but in contrast to earlier forecasts, Tesla's global market share, which includes the Chinese market, actually rose last year. This ascent outpaces the arrival of purported Tesla competitors from well-known manufacturers like Jaguar and Audi. This is a critique of the larger auto industry as well as Tesla's achievements. Although it is still thought that Tesla is inexpensive, a revision to the company's long-term estimate exposes two important assumptions that have recently changed and affects opinions. It's getting harder for many well-known automakers to convert to electric vehicles. Their inability to properly adapt to the shifting demands of the market and their poor battery technology serve as examples of this difficulty. Let's now examine the financial ramifications. It is projected that the cost of electric vehicles will surpass that of gas-powered automobiles for the first time in the next 18 to 24 months. As battery prices drop, this pattern is likely to persist. If a significant portion of traditional manufacturers' capital is still allocated to internal combustion engines, then they are facing a critical juncture in their history. Given the gravity of the situation, Tesla received an invitation to build a large facility in Berlin, Germany. This move demonstrates that the sector has realized it needs to shift rapidly to avoid losing a significant number of jobs. Now let's talk about investing. Tech businesses have had an amazing year in 2023, with Tesla topping the pack with a share up an unbelievable 110% as of early August. This spike is in line with the 34% yearly increase of the Nasdaq Composite Index. But the IT industry has expanded dramatically, and Tesla is not alone in this. If Tesla is the stock to watch in 2023, investors might be wondering. The performance of the business, the general context of the industry's growth, and the response of the market all influence the answer. For the moment, let's turn our attention to Tesla and Facebook. Both businesses have exhibited incredible tenacity this year, reflecting investors' resurgence of interest in growth stocks. This follows a difficult 2022 in which a number of preferred equities experienced severe declines, some of which were as high as 30 to 40%. Although many investors find these swings unsettling, they are typical in the stock market. The incredible 110% rise in Tesla's shares in just 7 months in 2023 is a clear example of how volatile the stock market can be for those who have a keen eye for it. This huge gain is evidence of Tesla's solid performance and investor trust. This quick expansion, meanwhile, also draws attention to a vital component of stock market investing: volatility is unavoidable. Skilled investors understand that the stock market is cyclical, and that even the most successful companies, such as Tesla, experience downturns from time to time. A number of things, including market corrections, economic downturns, changes in investor mood, and issues specific to a given company, can trigger these downturns. While price reductions have the potential to boost sales volumes, they also directly affect the profit margin per car sold, potentially resulting in a reduction in the gross margin as a whole. The backdrop of rising interest rates is particularly relevant in this case, given the rising cost of financing. Large purchases like cars are more likely to be made by customers, which may lower demand. This is also greatly influenced by inflation, which lowers consumers' purchasing power and encourages them to be more frugal with their money, particularly when it comes to luxury or non-essential items. Tesla has responded to these economic demands with a calculated balancing act, Tesla may be able to increase market share and sales volume by cutting prices, but doing so may also put pressure on the company's profit margins, which might have an effect on short-term profitability. This situation also serves as an example of the more general challenges the car industry faces, which include the need for companies to continuously adapt to changing consumer preferences, market dynamics, and Tesla's competitive landscape. It is imperative to take into account the broader economic situation when examining a company such as Tesla. The current state of inflation and high interest rates affects consumer buying power, which affects the choice to buy expensive goods like electric cars. Therefore, it's critical to create a balance between our enthusiasm for the company's technological breakthroughs and a pragmatic appraisal of the market and economic realities as we evaluate Tesla's current position and future. Investment in the current economic environment supports this well-rounded strategy. Major purchases by consumers, such as cars, are being rethought. Tesla has actively increased sales by offering discounts in response, a move that has affected its gross margins. But was this the proper course of action? In order to make wise investment judgments, investing legends such as Warren Buffett are essential. Warren Buffett, the finance industry's wise man, has long emphasized the importance of adapting to the current economic environment. This theory is supported by Tesla's pricing approach. However, there are other factors influencing the company's financial health. The company's research and development expenditures, which increased to an astonishing $943 million, up 41% year over year, have been a significant contributing cause. While such substantial expenditures would cast doubt on the company's current profitability, they are a bold step that highlights Tesla's determination to remain at the forefront of the electric vehicle competition. In one quarter alone, the corporation made about $1 billion in investments. Tesla's billion-dollar investment in research and development is not just an expense, rather, it is a strategic decision to maintain the company's leadership position in its industry, which is crucial for both Tesla and its investors. Taking a broader view, Tesla has emerged as a significant force in the technology and automotive sectors quite swiftly. Thanks to its innovative designs and forward-thinking approach, which have proven disruptive, Tesla is establishing a cost advantage in car production, in stark contrast to legacy manufacturers like Ford, which still struggle with profitability in their EV divisions. It was predicted by well-known industry expert Cathie that traditional manufacturers would find it challenging to compete with Tesla without losing money. When complete autonomy is attained, Elon Musk sees Tesla becoming a supplier of robotic taxi sector with massive potential for income and profit growth that would eventually support the company's stock price. This is but one remarkable turn in Tesla's path. And further noteworthy advancement is the business's foray into driverless vehicles. Taking a broader view during this year's Q2 earnings call, Tesla's short-term fluctuations in profitability and gross margin appeared negligible in comparison to its long-term potential.